What's up, guys? Welcome back to Mark's Stock Review. Today's video is going to be on Chargepoint and the upcoming merger with SBE. I'm going to go over some transaction details, a quick overview of the company, some pros, cons, a final take, and that's all she wrote. Just an FYI, I do upload 2 to 3 new videos at least per week, so if you do find this video helpful, please consider subscribing. I would greatly appreciate it. It would help out this channel. That said, let's get into it. As full disclosure, I do not currently own any shares of SBE. It will be on my radar for this week, however. I will be looking to add more green power, HCAC, and workhorse this week if it lowers my cost basis. Chargepoint is planning to merge with SBE, which is Switchback Energy Acquisition Corp, Q4 of 2020 this year, assuming closing conditions are satisfied. The transaction is going to have an implied $2.4 billion enterprise value, a $3.0 billion pro forma equity value, and approximately $383 million in cash. The cash is going to be used to pay down debt, fund operations, support growth, and for general corporate purposes. The following is a brief summary of their business model.
What kind of company builds an electric vehicle charging network before the first mass-market electric vehicle has even rolled off the assembly line? Okay, we admit it. It's us. We're Chargepoint, and our passion, no, our obsession, is helping everyone make the switch to electric mobility. We see this moment in time as an opportunity to change the world for the better. And since change is hard, the best thing we can do is build a robust network that makes it easy for people to switch from the old way to the bright and shiny new way. And that's what we've been doing since 2007. Designing a charging experience for businesses, fleets, and drivers that is as easy, convenient, and seamless as possible. We've built North America's largest charging network, and we're rapidly expanding in Europe. We've worked with everyone from car manufacturers and utilities to policymakers and influencers to pave the way for EV ubiquity, and we've developed advanced software that makes the charging experience simple. This is much more than just business to us. Electric mobility means cleaner air, and what's more important than that? It's this passion that has driven us to deliver more industry-shaping innovation than anyone. We'll be dreaming and driving and innovating new ways to make the EV charging experience as user-friendly as possible every waking moment we have. We can't help it. That's just who we are. Chargepoint.
One advantage to investing in Chargepoint would be it's a way to diversify your EV portfolio with a company that's not in startup phase. They're already global. They have 147 million revenue in 2019, and they expect their profitability to be in 2023. Another pro for this company is that they have a subscription business model. Instead of one large upfront cost, a lower monthly cost can make it easier for budgets and then attract more customers. In addition, it's going to make predicting revenue easier, so that's going to help out investors. It can help reduce churn rate, and it enables cross-selling, which can actually add to the bottom line. Another big advantage for this company is that they have institutional investors, including Bally Gifford, who happens to be the largest outside investor in Tesla. Having a big investor like this can improve price discovery, which in theory can help decrease volatility for the share price. It can also increase the allocative efficiency for the company and promote management accountability. One drawback to investing in this company might be that they may have to pivot their business model as batteries improve. In my opinion, there's still plenty of time, but eventually most charging may be done at home. Chargepoint does offer this, but it's only a portion of their business model. The last possible drawback to this company would be the big question mark hydrogen. Currently, there's not enough demand to scale, but it still should be considered when buying a company like this that depends on EV charging stations. Also, an article came out yesterday from Barron's titled "Hydrogen Power is a Thing," and apparently Plug Power got an upgrade from Morgan Stanley. From my point of view, this is not a reason to stay away from Chargepoint, but as improvements are made in hydrogen with their electrolyzers, which split water into hydrogen and oxygen components, which leads to zero carbon dioxide emissions, it's just something to keep in mind. And lastly, if you invest in a company like Chargepoint, I would just keep an eye out for environmental changes and any mandates coming out of the government which could affect the share price in either direction. Final take. As far as valuation goes, it's tough to put a valuation on SPAC companies as it is. And then if you're bullish on Tesla with a really high valuation, it's hard to say that you're not going to be bullish on this company because it's overvalued. So that's number one. And number two, investing in a company like Chargepoint is a great way to diversify your EV space investments. For example, you could have some investments in Tesla, one of the bigger companies, and then you could also have investments in some of the smaller companies like Arrow, Workhorse, and Green Power. And then on the EV charging station side, you can invest in a company like this and possibly even Blink, depends on how you feel about that company. And then finally, maybe even investing in a company like Plug Power to hedge your bets. And that's all she wrote for this video. I hope you guys found it helpful. If you did, please consider subscribing and hitting the thumbs up. I'd greatly appreciate it. It would definitely help out my channel. Hope you guys have a great rest of your day, and I'll be talking to you soon. Take care.